Let's talk more about retail with Simeon Siegel, Senior Managing Director and Consumer Equity Research Analyst at now Guggenheim Securities. Welcome back and congrats on the new job.
Thank you. Good to be back.
So you're still covering all the big retailers, but I guess have a new fresh slate because you're starting at Guggenheim. Who do you like best right now?
Isn't it fun to take a fresh slate? You get to just re-examine everything. You get to hear about returns. Listen, I think it's a fresh slate, but it's also a similar approach because what I want to do is I want to recognize there are really good businesses that sometimes are expensive stocks. And so that's TJX, Planet Fitness. And then there are things that get a little bit more fun. There are things that are maybe better businesses than the stock show, and they're a little bit dirtier, for lack of a better word. And Birkenstock right now looks like one of those, one we haven't typically spoken about. And so if I can find a business that is growing like a growth stock, but not trading like a growth stock, that gets really interesting.
Yeah, so that's a Birkenstock, you say?
Birkenstock.
Anybody else?
Yeah, there are. I think that as we get dirtier, I like how you're like pushing me from the easy ones and go to the ones that are more fun.
Those are the opportunities, right?
So they are, but listen, I want to be clear, TJ and Planet have been great too. And so compounding is powerful. So now looking though to try to go to your question, I still, call me a glutton for punishment, I still think Capri, Michael Kors, right? We've spoken about this one a lot. I still think it's undervalued.
It's been a disaster.
And you know what, it's been coming back though, right? So you pull up that chart, ever since the Versace sale, we're realizing this balance sheet is a lot cleaner than it looks. And so there's a turnaround story, but there's also a balance sheet cleaning story. And so that's the beauty of retail, where you can find these businesses that you and I, we know so well as consumers. But from a stock perspective, sometimes they get neglected.
So you think TJX and Planet Fitness, good businesses,
expensive
too expensive though?
Expensive for a reason, and they'll always be expensive. And you and I will never be able to justify the PEG ratio. I know we talk about hyperscalers a lot. I'm watching these like, who knows what valuations mean right now? Valuations can mean growth. They can also mean sleep easy at night. TJ Planet Fitness let you sleep easy at night. Birkenstock, Capri, you find these opportunities that have these torque, let's say, when things start working again.
I mean, Walmart. I think about Walmart. I know it's not necessarily on your. I don't think it's on your coverage list, but trading at 40 times, it's done very well. It doesn't appear that investors are questioning the multiple yet.
I think there's this beautiful thing, and we've talked about this a bunch, of why things are expensive. So what makes valuation? To pretend to get philosophical here, it's supposed to be growth. You pay a lot because in a few years you won't be paying a lot. It's time value of money, and to say if things are going to grow in 5 years, then it's not a high multiple. It's a low multiple 5 years from now. But that has evolved. We have this idea of this consistency premium, the sleep easy at night premium, where you can look at a business and say, I'm not buying the growth. I'm buying the consistency. I'm buying the fact that it's not going to trip me up. And whether or not that's in the books, whether or not you'd find that in an MBA class, that's what we're seeing in reality. And so what you see with Walmart, Costco, TJX, right? Some of these businesses that have seen multiples or at multiples that they've never seen before, it's because of that
premium to sleep at night.
You know, you don't cover Walmart, but you do cover Amazon. And I am curious as to how you see Walmart's ascendance in terms of online, using the ubiquity of its store presence, in terms of what it's been able to do. It feels as though they've really made significant gains.
Yeah, it's funny because I think with the Walmart conversation, and I don't cover it, it's covered by John Heibuckle in the firm, so I will let him opine on the company. But I think people do talk about this spread between, is it a tech business, is it consistency, is it growth? And so this notion of when you look at what Amazon has done to retail, and also obviously what it's done on the AI front, and if you can dream, right, this idea of retail media that pops up, if everyone wants to put technology into retail, I think retail is best when we think about it as the age-old business of bartering. It's you're convincing me to spend the dollars that I work so hard on to buy your product or your service. And if you can get me to do that on a repeated basis, it's a very hard thing to fight.
But my question was, has Walmart's success threatening Amazon in a way? Is there a response that you expect from the retail side of Amazon here, given that's what you cover?
Yeah, I would say no. I would say there's a lot of volume to win. I think we're still watching Amazon sell a lot of things, and I don't think that's going to stop. I think that the reality is what you want to see is you want to see a lot of different, you want to see some really strong competitors. When you think about big box retail, who's taking from who, I think we can see Walmart and Amazon as winners. I think there's others on the other side where you're watching the market share being donated.
Yeah, I can imagine what some of those names are.
You also, you're neutral on Lululemon, which has been in the news. What would it take to move you into buy now that it looks like Chip Wilson is launching a proxy fight? Although word from Lululemon yesterday is that they are going to evaluate his options for board directors, and maybe they won't have a fight.
This is the friendliest proxy fight, right, that we're seeing. They're being attacked by two different activists, and yet they're talking to all of them. I think that, and you and I have talked about this for a long time, Lulu is a very strong brand, but Lulu is an overstretched brand. And so my team has done this great research showing where brands ubiquitize, where we get oversaturated. It's $3 to $4 billion in the U.S. Lulu's $6.5 is a lot higher than that. And so what that means is you get to a certain point where to continue feeding the growth beast, you go beyond your core. You start trying to bring in new audience, new members, and what that does is it dilutes, it stretches other people away. And so Lulu has both this notion of everyone's talking about they've walked away from the product, but they're still selling a lot of stuff. They're convincing people to still buy. They have competition, but I just wonder if they're too big. And so now you've got Chip Wilson coming in with his slate of board members. You've got Elliott coming in with Jay Nielsen, who you and I have talked about in the most glowing terms.
I know.
I mean, she's
You love
fantastic.
her.
And the question is, what did she do in the past? She recognized sometimes being smaller to get bigger is really important. That's a very hard thing to do.